welcome my dear friends. My name is Avilash and I'm a trader next door. In this video, I'll be analyzing the charts of Euro USD and GBP USD. If you're watching my videos for the first time, you can subscribe to my channel for regular market analysis. So let's get started. So my dear friends, this is the fourth chart of Euro USD in front of us, and we can see that Euro USD is not moving much. Euro USD is standing around the resistance that we discussed on Saturday. And to be honest, this is the main reason why I have reduced making videos on Euro USD and GBP USD. Personally, I have stopped almost completely trading on Euro USD GBP USD because of their not a clear direction and too much of spikes in the market. And honestly, when you see a market condition like this, okay, you know it very well that this is not an ideal market to trade, and obviously you don't feel right to make a video as well. But still, people request to make videos on Euro USD, GBP USD, so here I am. Okay, so we can see that at present we do not have any clear trend on the market right now. Okay. And if we look at the economy calendar, we can see we have news coming up on Euro, which is retail sales. After that, ADP, then we have open jobs or job openings, and then Federal Reserve Chairman Jerome Powell's testimony. So market will be very volatile. So you need to be careful. Okay, because at that time of volatility, the levels will not work, because it's a bitter reality that technicals do not work when fundamentals dominate the market. But we are retail traders, we have no say in fundamentals, so it is a responsibility of the retail traders to know when to go with the fundamentals and when to go with the technicals. So when the market will be dominated by the news, try to follow the trend of the market. Okay, and if you look at the chart of dollar index, then we can see a similar story. Dollar index is also trading inside a range. We have been discussing this for a long time, that to continue the upside, DXY will have to break 104.20 and move higher. And DXY has tried also many times, but it has failed to do so. Ultimately, it gets rejection. And if DXY fails to go up, and if we see DXY going down, then our next important level will be 103.40, because if DXY breaks 103.40, it will be heading towards 103 level. If that happens, we will see good amount of upside on the chart of Euro USD and GBP USD. That's why I said that try to follow the trend of the market after news. So at this moment, if you have any trading of any position going on Euro USD, like buy, sell, you can be on the trade, because in sideways market, okay, you always get an exit. In trending markets, for example, on gold is super bullish right now. So if you are holding a sell, then obviously things are very critical for you. But this is a sideways market. In sideways market, if you are trapped, then obviously you can expect that at one point you will be getting your exit. So if you have any buy position, sell position, you can be on the trade as long as the market is like this. But in this type of market situation where we do not have a clear trend present, where the numbers of buyers and sellers are almost equal, buy at support, sell at resistance is the best trading strategy. Many people do not like sideways market because it is boring. Many people lose money in sideways market because they enter on the middle of the chart, losing patience, taking impulsive trades. So if you want to survive in any sideways market, then obviously you will have to stop entering on the middle, because if you enter, there's a high chance of getting trapped. So on the chart of Euro USD at present, the best levels to enter are 1.0790, 1.0768. These are the two levels where you can look for a buy position. If market comes down, as a day trader, you can observe the market. This is the 4 hours time frame. You can switch to a lower time frame like hourly time frame, 15 minutes time frame, to observe the market behavior. On lower time frame, if you see the market is taking support, market is showing price rejection from below, you will get the confirmation that buyers are present and you can hit the buy button. 1.0790, 1.0768. Why? Let me show you. Here we are simply using Fibonacci here. Fibo 50 along with the previous support makes it a good level. If you want to round it up, then you can also make 1.0800 to 1.0790 as well, because round numbers are psychological supports. Okay, and we have FIBO 61.8% retracement level at 1.0768 plus previous support. Sometimes the market doesn't come for deep retracement. In that case, we can also look for some sort of bounce or quick bounce around 1.0815 around this area. As a day trader, if you see a quick bounce around this area, you can go for a buy position for 25 to 30 pips, not more than that, because after that news will come up and news will be dominating the market. So this is what we can do if market comes down for buy as support. On the other hand, if you see market going up, then the resistance level that we discussed earlier is still valid, 1.0885 to 1.0915. The big resistance zone where we have multiple levels are still there. Simply switch to a lower time frame just to see the price ejection from above. Once you'll see the market is slowly reversing in this zone, you can take the sell position. But yes, follow proper risk management, because this is a choppy type of a market and risk management will be very, very important. So we have got good sellers present around this area, we can look for a sell. We have got good buyers present around this area, we can look for a buy. But right now things are not very clear. So if you're not a fan of Euro USD, you can avoid. Same goes with GBP USD also. GBP USD is more pathetic. So this is the condition of the chart. You can see that first of all, we do not have any trend present. Market is not in uptrend, not in downtrend. Then this market is not even proper sideways also, because we can see that we do not have a clear level where we can look for a sell or buy. This chart is a very good example of a choppy market, and choppy markets are a little dangerous, I would say, and you need to be very careful with your positions. In this case, I will only recommend 2 or 3 positions. That is, if you see market shooting up, you can look for a sell around 1.2766. Around this area, if you see market reversing, you can look for a sell because of previous price ejection around this area. But in case market doesn't behave according to our expectations, just leave it. No need to do anything, because instead of losing money in the market, it's better to avoid. So if market reverses from 1.2766 zone, we can look for a sell if market goes up. On the other hand, if you see market coming down during the day, especially before the US session, and if the market is not very volatile and market is not acting crazy, in that case you can look for a buy around 1.2650, this level here, and then 1.2626, this level. These are the 2 levels where we can look for a buy position for 30, 35, 40 pips as a day trader, not more than that. In this market condition, it's not a wise decision to hold a trade as a swing trader, because for a swing trader you need proper swings in the market, and swings are not present. Okay, so let's wait and watch and try to avoid any impulsive trades, because the charts are not very good, they look choppy, and the testimony of Federal Reserve Chairman will be important. Market will be volatile, but yes, the major event of this week is the NFP, which is coming on Friday. Okay, so that's all from my side, my dear friends. Thank you so much. Bye bye, take care. If I have missed anything, please write it in the comment section.